Hello, everybody, and welcome. We've got about an hour and a half today, and we've got a few things to traverse. I'm going to take you through the CER Readiness grant, the logistics about that, and then I'm really pleased to be able to have Andrew Jones from BDO Waving talk about accounting considerations of carbon projects, and then Matt Edgerton Warburton to talk about the legal considerations of carbon projects. This is being recorded for the benefit of those that couldn't make it in person. And I will hopefully facilitate this in such a way that you get an opportunity not just to hear, but to also ask some questions, curly ones. And yeah, we'll do our best to try and make this a clarifying hour and a half together. So if you just bear with me, I think you can see my screen. I have got quite a few slides here, but I'm only going to go up to slide 13. As always, we're proudly funded by the New South Wales Government for this program. As some of you will be aware, we were able to complete 4 landscape impact programs between sort of October last year and the end of June. And there we finished the successful landscape impact programs with a range of local media that can help to grow the transaction. But we're also aware that transactions won't grow themselves unless there's people in the region that have actually done transactions and knocked the edges off it and come to understand. Oh, I don't want to play you all. 100 years. I want to just move on. I'll bugger off. Come on. There we go. So, as mentioned, phase 1 was October to June. In that time, we looked at what can we do that has a big impact. We identified the STAR project in the Southern Tablelands, the Murray Inland Delta project in Western Murray, and the Headwater Custodians project in the Upper Clarence. So today you're here, you're able to, because you've registered, take advantage of phase 2 of the program. In phase 2, the registration of your carbon project is the goal. And then you will have the opportunity once you're registered. It's a bit like a DA. You can't go and do property development without a development application, but just because you've got a development application doesn't mean you have to do that property development. You just can't do it without it. In a similar way, being registered will be a sort of tipping point on your viability for getting funding. Now, typically, carbon projects, particularly environmental mallee plantings and soil carbon, have project costs up front. And then they repay after 5 to 6 years for the balance of 25 years. So your project, in terms of getting your wire and fences and water or trees in the ground, may need funding. But whoever is going to fund, whether you go down a self-proponent or have Regen Farmers Mutual as a proponent, you're probably going to need some upfront costs funded. And in order to get that, you'll need to be registered with the CER. So we're mainly talking, with the work that we've been doing about environmental plantings and soil carbons. These are generating Australian carbon credit units, and you can retire these or they can be sold for income. Now, when you're thinking about what method works, you need to really look at your land management assets and understand, are they being used for highest and best use? Each of the carbon methods has obligations on the farmer, and each of the carbon methods may require eligibility, and there are associated risks. To help you understand your asset, your obligation, your eligibility and risk in order to get registered, the $10,000 per farmer is available. Now, this is a bit of a nightmarish slide, and you don't need to know it, except that this is what's required to do an Australian Carbon Credit Unit Scheme project. And there is a significant amount of work in getting registered. It's usually beyond the technical and time and interest of most farmers. But as a farmer, you're going to need to be involved, because even if somebody is to be a service provider with the $10,000 that you've given in order to get you registered, they're going to need things like land titles and legal rights documents and authority to sign, and you're going to need to show various amounts of data, depending if you're a self-proponent or a proponent with us. Also, you'll need to show that it, for your own benefit, but for any funders' benefit, that it makes financial sense. And to that end, the outcome of the 10,000 CER readiness grants, apart from being registered, is that you will have a clear idea of your financial model, and you can share that with your bank, your accountants, your lawyers, to get the sort of personalized and accurate information as it relates to your setup, your company structure, or your partnership, or your way of doing business on the farm, will impact on the tax and the succession and the accounting issues on a case-by-case basis. So we totally support farmer choice. We offer to support Regen advisors so that they can provide support to farmers in southern tablelands, Murray Inland Delta, or headwater custodians. In the Murray Inland Delta, we're recommending that the farmers use Western Murray Land Improvement Group. In the Southern Tablelands, Jeremy Gibson primarily. Jeff Kay is available, particularly useful for the design of the plantings. Oh, pardon me. And in Headwater Custodians, there's two great regen advisors in terms of Kim Wilson and Tanya Jobling. Now, you don't have to use who we recommend, but obviously those that have been recommended by us have been trained, and we know that they're good value and that they're familiar with your landscape projects and what it takes to register a carbon project. So the goal, as mentioned, is to get you registered for a soil carbon for either plantings or soils. You can claim up to $10,000. In fact, I've already provided 4 lots of $10,000 to 4 of our farmers. And hopefully when I go to check in this week, there'll be more people who are interested in claiming. It is easy to claim, and I'll show you on the next slide. It is only available to eligible expenses that lead you towards CER registration. You get the choice of provider, and you get to understand exactly what feasibility looks like for you. So if you've got your phones handy and you haven't already got a link to this form, I will send you the form after this webinar. But essentially what you'll be asked to do at the form is to provide your name and your bank details and provide an explanation of how the job moves you towards CER registration. Attach an invoice from a service provider. It doesn't mean that you've already gone to the expense, but just that you have an invoice, and then we can reimburse you. If we don't have the evidence, I'm not going to give you the $10,000. So just giving me your name and your bank account and saying this will help me, but not attaching your invoice won't get you the $10,000. I need the invoice so that I can turn around to the New South Wales government and say that's what we gave the grant for. You will receive payment once you've gone in and requested it, like within a couple of days. So on a weekly basis, on Thursday mornings. We're checking what's in there for payment on a Friday. And if you miss the Thursday morning cutoff, it'll fall into next week. But each week we'll be running payments. So in terms of cash flow, if you've got an invoice for the work that you're going to need to do, we can pay you, within that week, and then you'll have the money in your account in order to pay the service provider. We do want to receive feedback on your funding. Was it helpful, etc.? And we will provide any feedback on why we've rejected your request for funding. And so far, the only reason we've rejected is a lack of evidence attached. So when you go to that, what we were just looking at with called a QR code, or to the Google form, you'll see that it asks you for your email, and it details that you can use this money for consulting, for customization, for financial modeling, for assistance, and for project management. So really, depending if you're coming off a very low base of knowledge, or even if you're quite well advanced, there is funding there to help you get CER registered or beyond. I'm going to stop sharing for now, only to say that on this last page that we do offer the $10,000 CER Readiness grant to people that want to be a self-proponent, or to people that want to be an RFM proponent. We have lots of other slides that I will hold on until we've done our sort of Q&A. In the meantime, I was going to hand over to Andrew and then to Matt, and have them talk about accounting and legal considerations. Unless there's a quick question about what the slides that I've put on. Otherwise, I'll hold them over to Q&A. Questions? Concerns? I'll take silence as golden. You know I will.
I've got a question, Woody.
Yep. Who's that, Tanya?
Yes, Tanya here. When you put up the slide of the process of application, the one with the 50 parts on it, there's a box there that says you, and you've actually been referring in your talk commonly to you. I'm guessing that you're talking to you, the farmer, not you, the consultant.
You, the farmer.
Doesn't look like a lot of farmers here today.
Well, 1, 2, 3, 4, 5, 6, 7. More than half. There's 10.
Okay.
If I can count you, there's 11. Yeah. There's only one accountant and one lawyer.
Sure. So when you say you, that's referring to the farmer. So in that initial diagram, the you is the farmer.
Yep. So if we go, bear with me, Tanya. You mean this one? Farmer,
Yep.
log in, gets
Yep.
project application, puts in the documents, submits, get an ANRU account. At the similar time, they've got to nominate themselves as a proponent, or nominate who their proponent or agent will be. In order to become a proponent, they'll need their land titles, fill in the landowner details in the form. And if they're using us or somebody else, a carbon service provider, they'll need to provide legal rights. And then the proponent will need to identify themselves, which has a whole bunch of other things. But you, at least in the top left, if they're the self-proponent, then they'll have to get all of these things. They won't need to they'll need to establish that they've got the legal rights, but they won't need to transfer the legal rights. Is that helpful?
Yes. So an agent can't take on any part of that process.
No, the agent can, once they've been given legal rights and the authority to sign, they can do lots of the project lodgement on behalf of the farmer.
And I'll be talking about that in my section.
Thank you.
Awesome. Andrew, I'm going to ask you to share your presentation, if that's all right.
Yep, no troubles. See whether I can get see if I can get my system to break.
Is that a good thing?
No, not usually. How does that look? Can you see that all right?
Brilliant. Looks good.
Fantastic. Alrighty. Well, good afternoon, everybody, if you're on the East Coast. Yes, I'll be talking about business and financial implications. Predominantly, I was saying before, I think most of you joined, I'm a corporate and international tax partner with an accounting firm called BDO. So we're a national firm, Australia-wide and indeed globally. And in that role, a substantial part of my client base is in food, what we call food and agribusiness, larger corporate farmers generally, but across the full spectrum of primary production, pre and post farm gate. And I'm by virtue of that I'm intersecting a fair bit these days with our sustainability team. Within BDO, the sustainability team is mainly talking more to the corporate side of Australian reporting around their disclosures that need to be made in financial statements, but also around journeys to decarbonise and so on and so forth. So I am based in Brisbane, where it's raining, and acknowledge the traditional owners where I'm presenting from today, which is the Yagara and Turrbal peoples. And without further ado, I probably just need to start with this disclaimer. So I'll be talking about taxation advice, taxation concepts. It's not advice, dependent upon each case. I think that's probably straightforward enough. The other thing that I just want to point out, which I think is important, is that I'm not providing financial advice. This is relevant because Australian carbon credit units are financial products under the Corporations Act, and advice regarding trading or dealings in Australian carbon credit units must be provided to you by an Australian financial service licensee holder. So I'm not doing that today. But I will be talking about tax implications of carbon farming. As I said, I'm a tax advisor by trade. And this is, I think, the more impactful and interesting side of the accounting equation for carbon projects. And there's some interesting quirks around primary producers and how they are taxed when they carry on carbon projects. I'll try and drill into that a little bit. I'll spend a little bit of time talking about the commercial and accounting impacts, and that sort of dovetails a little bit into the financial modelling piece, which Wardy briefly touched on. And just because it's a continually evolving topic, I've got some content around biodiversity credits, but I don't intend to spend a huge amount of time speaking about that. I'm more than happy to take questions throughout or at the end. So if anyone has anything that doesn't make any sense, or you think I could talk about something in more detail, just shout out and I'm happy to do that. All right. So carbon farming in general, some of you might be aware of the concept of capital gains tax and business tax. It's important to, I think, set the scene by saying that Australian carbon credit units are not subject to capital gains tax. So the Australian carbon credit unit is a revenue asset for tax purposes. I promise I'll try and stay away from jargon. But so when we're talking about Australian carbon credit units, we're not talking about CGT assets. So you can't get things like a 50% discount or your small business CGT concessions on the carbon credit units. That makes sense. There's a There's a different question when it comes to the actual project. The project area itself might be a CGT asset, but the Australian Carbon Credit Unit is not. Taxing points for Australian Carbon Credit Units. So you've gone through the process, registered a project. You have a proponent in relation to that project. The proponent has an NREU account, Australian National Register of Emissions Units account, and the various requirements for the method of that project are adhered to. And at some point, the Clean Energy Registrar registers ACCUs that land in your NREU account, right? So that's the creation of property. That is not a taxing point. That's the grant of an ACCU. So the grant of an ACCU is not a taxing point. So you're taxed when you cease to hold an ACCU. So ceasing to hold, that could be a disposal, it could be a retirement, it could be a transfer. And the amount that you are taxed on is the amount of proceeds that you receive for ceasing to hold. So in the ordinary run of things, carbon farming activities take place. ACCUs are issued, they're held in an NREU account, and then they're sold. So the sale proceeds is taxable at the point in time when the ACCU is sold.
Andrew, just on that, when
Yep.
you get issued an ACCU, I presume it's like you get issued it at $0, and let's say you sold it for $20.
Yep.
You'd be paying capital gains tax on $20. Is that how it works?
Oh, so you're not paying capital gains tax, Matt. You're just paying tax. So it's revenue. It's a revenue asset. So it's just the proceeds that you receive, your $20.
Yeah.
Forms part of your taxable income.
Okay.
Okay. Probably worthwhile also talking briefly about
Andrew.
what's on. I'm sorry.
Andrew, Christoph here. Just a question. What you just mentioned that you are taxed on the proceeds that you receive means that if you retire an ACCU for your own carbon neutrality, there's no tax implications. Is that correct?
That's correct, Christoph. Yeah. So if you're retiring an ACCU, there's no proceeds received in relation to ceasing to hold. And so there's no amount to include in your income from ceasing to hold.
Cool. Thank you.
And so if you think about it, if you are granted an ACCU and you retire it in the same year, then it's essentially an in and an out.
There's a question, Andrew, in the chat about GST on carbon revenue.
GST, carbon credits are input taxed. So I'm not a GST practitioner, but I'm told that they get treated as input tax supplies, financial supplies.
Thank you very much.
Okay, so primary taxing point is when the proceeds are received on ceasing to hold. There is in the law, again, the general rules apply a rolling balance mechanism. Now, this is a fancy name for a trading stock account. So ACCUs which you hold in your NREU account over a period of time, the rolling balance mechanism taxes changes in value. So if the value increases, you get assessable income included in your income. If the value declines, you get to deduct the reduction in value. Now, the question here is what are we talking about when we say value? What's the value? So there's a few different concepts, and I won't go into them in great detail, but for the rolling balance mechanism, the tax law permits you, where you've been granted the ACCU, it permits you to select a value for that ACCU based on a few different methods in the law. Predominantly, you're going to be going out and looking at the carbon markets to say, well, what's the deemed value of that ACCU? Now, where there's different attributes for different ACCUs, you might get different markets that emerge. So the value of an ACCU, which is linked to a land restoration fund project in Queensland, might be different to an ACCU which is produced out of a landfill gas project in New South Wales. So there's no consistent definition in the tax law about the market value. I just want to flag that on the way through. It can be a complexity when we're talking about ACCUs. Generally speaking, my experience, most carbon service providers or proponents are selling to a carbon service provider who has a contracted buyer already. So it's relatively straightforward to identify the value that you're talking about, but it's not always the case, particularly if you're just selling on the spot market. So we've got the rolling balance mechanism. Now I can see some chat questions coming through. I'll try and might get you, Morty, if you can throw the chat questions at me. I can't see everything on the screen. Sorry.
Thank you. The chat was from Christoph just in relation to Kim's question on GST and whether it was input taxable or not.
Okay. Might have to come back to that one.
Indeed.
If that's okay, Christoph. If there's a need to. Sorry. The thing about the rolling balance mechanism is it doesn't apply for individual primary producers from the 1st of July 2022, right? Somebody said to me in a presentation I did a year or so ago, well, what's an individual primary producer? It's a person, and a human being. So if you're a primary producer and you're a human being, you don't have to apply the rolling balance mechanism in relation to ACCUs which are granted to you on or after the 1st of July 2022. And you think to yourself, well, why is this important? It comes about from a raft of measures that were introduced roughly 18 months ago that reform rules for primary producers and carbon projects. So I'll talk about them in a little bit more detail shortly. But one of the quirks that comes out of those reforms is that there's a delineation between individuals and other kinds of primary production businesses, companies, trusts. So it's only the individuals who have that rolling balance mechanism switched off. I think that might have been Christoph.
Yeah. Again, sorry to
you're right.
interrupt again. It's an important question because does that, and you'll talk about it, but I just want to throw in the question now is, what are the implications for when the land title is structured as a trust, for example, which is common for small farmers, and therefore the proponent is that trust. But obviously for all intents and purposes, the actual landowner is an individual or a group of individual closely related.
Like
does that important ruling, exactly. Does that important ruling apply in those cases? Or,
no, it doesn't.
Because the implication, it doesn't.
No, it doesn't.
So
it doesn't.
It would, when it doesn't, it means that the rolling mechanism doesn't apply, and therefore they have to take into account the change in value or not.
Yeah, so in that case, I think, Christoph, the trust would be the proponent, and it would have the ANREO account. So if the trust holds the ACCUs, then it still gets the rolling balance, even though the trust might.
Which means, might be in effect be a family trust. So
correct.
The very important conclusion is when we structure the for a farmer who wants to be a proponent, but their land is held in a trust or a partnership, then the proponent must be an individual in the family and not the family trust. This
is an important point, and I'll speak to that in a little bit more detail in the next slide.
Okay, cool.
But just to finish this off, so individual primary producers, exactly right, Christoph. So we'll come to that in a moment. The costs relating to ACCUs, I've said, are generally deductible, right? In an ACCU sense, there's a lot of different costs which apply. So there's the cost of undertaking the method, the fencing, the plantings, et cetera. Those costs you just consider according to the ordinary principles of tax deductibility. It is possible to specifically deduct costs in relation to an ACCU, obtaining an ACCU. So lodging an emissions report with the Clean Energy Register or an audit report. Those costs are specifically deductible, but in a general sense, you're looking at mostly, I dare say, deductible costs for undertaking projects. The final point on the slide, specific rules for the transfer of ACCUs upon the death of a holder. So ACCUs are personal property, and if they're held by an individual, they form part of the person's estate. I'm sure Matt will talk about that a little longer. There's a deemed market value disposal for tax purposes if a person dies holding an ACCU, and the income goes into their trust, into their final tax return. Again, disposals of ACCUs outside the ordinary course of business. I wonder about this. I'm not sure why anyone would dispose of an ACCU outside the course of their business, but if you do, you are not able to deduct the cost of acquiring it. So, let's get into the more interesting primary producer rules. So this is the topics that we were talking about before. The reason that these rules changed was there was conjecture that income from ACCU generating projects, carbon income, was not primary production income. And primary production income is obviously very important for your farm management deposits and income averaging. I say there was conjecture because there was never any specific exclusion from the law, but there were a number of ATO rulings which came out over the course of the past decade, which pointed away from those ACCU sales being primary production income. So the government, the former government, federally, the Morrison government, introduced changes to the law, announced changes to the law, which were introduced and enacted by the current government. Those changes, in summary, are intended to clarify that income from selling carbon credit units is primary production income. Sounds very straightforward. It can only apply to ACCUs which are issued into your ANREO account on or after the 1st of July 2022. This is what we were talking about just a moment ago. Individual farmers, but not trusts, partnerships or companies, can ignore the rolling balance mechanism. Whilst it sounds simple, there are complexities. And one of the complexities is that carbon service providers, the rules are supposed to work the same way. We'll talk about that a little bit more in a moment. But the primary production business needs to be carried on by an individual, either alone or in partnership, or by a trust that the individual benefits from. Now, that's the primary production business. That can be distinct from the actual land ownership structure. And depending on where your proponent, who your proponent is in your overall structure, can govern, as we were briefly mentioning before, the taxing points for the ACCUs. So all else being equal, if it's possible for an individual to be the proponent, and that individual benefits under a primary production business carried on by him or herself, or in a partnership or under a trust, then that's probably, I say probably, the best outcome from an ACCU perspective. Now, there could be other financial implications that you want to work through, but under these primary production rules, that's the way that it points us to. Now, that's not always going to be simple or straightforward. Companies are right out, unfortunately, but it's not really relevant for companies either, because companies can't obtain a farm management deposit deduction, nor are companies eligible for income tax averaging. The final point on the slide is a little quirky one, but if you have a trust, which is the proponent, which is what we were talking about with Christoph a moment ago, the trust is the proponent. It gets the ACCU into its account and then it sells it. The trust has to distribute that ACCU sales income. The trust has to distribute all of its income every year. It distributes that income out to an individual. Lo and behold, the rules say that income is primary production income. Pretty straightforward. But because the trust is a trust and not an individual, it can't switch off the rolling balance mechanism. So if that trust holds the ACCU in its NREO account for more than a year end, it potentially generates accessible income from having a change in value, like a gain under the rolling balance, and it needs to distribute that rolling balance gain, right? That's not primary production income, or potentially not primary production. So there's kind of weirdness that falls out of these rules. I wrote a submission to the government, but they didn't listen to me, regrettably, sort of pointing this out. But carbon service providers, probably enough said on the slide, but essentially, if you engage a carbon service provider to undertake the project, as in they are the proponent, the carbon service provider is the proponent, then the ACCU is issued into that carbon service provider's NREW account. If they then transfer the ACCU to you as the landholder and you sell it, then that transferred ACCU is deemed to be an eligible ACCU, and you can get primary production income status on the income from the disposal. Or alternatively, depending on your arrangement with the carbon service provider, you can potentially sell the ACCU. They can potentially sell the ACCU and then give you a split of the profit. And same deal. So it's supposed to come out to you as an individual as primary production income. There's a specific exclusion where the payments are structured as a payment under a lease. There was one point which I failed to mention. I just might go back if I can. To be eligible, the ACCU has to be first issued to the primary producer in relation to a carbon project connected with farmland. Now, we're aware sometimes that the carbon project might be on the same land title as the primary production business, but other times it may not. So the real question is, to what does this mean, connected with farmland? I just sort of flag it through here. I don't have an answer. There's no guidance on it. It should, logically, the connection should be, proximity, I would have thought. But maybe the connection could also extend to relationship of owners, or maybe there's a temporal connection as well, like in time. So there's a bit of an open question as to when is a carbon project connected with farmland.
Could they be separating it from like mining rehabilitation sites and stuff?
Yes, it's potentially, yep. But I think that when the drafters put the legislation together, they thought that, yeah, it'd be straightforward to link a carbon project with farmland. But obviously, some projects just don't play well with farmland in a traditional sense, particularly if you've got to exclude or you can't have animals. So adjacency, if it's adjacent to the primary production property, that should be fine. And I imagine that most cases it would be. If it's 100 k's down the road, is it still connected with? Don't know. Yeah, so.
Andrew, just got a couple of questions on the chat. From a tax perspective, are costs deductible even if the ACCUs are retired for zero income?
If the intention of undertaking the carbon project was always to retire ACCUs,
yep,
then I would say that the costs arguably are not deductible. Right. But it's an interesting question, and I don't. Yeah, there's a few different facets to it. So I wouldn't want to come out and be prescriptive and say black and white no, but I would exercise caution if the intention was to conduct the carbon project for the purpose of acquiring ACCUs, which would then be retired. But the rules aren't very well structured, in my view, to support that activity. I'll talk about that in a second.
Excellent. And then, Tanya, can I get you to explain your second question, the contradiction, partnerships and partnerships not qualify, please?
Yes, thanks, Andrew. Individual farmers, but not partnerships, can ignore the rolling balance mechanism. But if you're carrying on a primary production business as an individual alone or in partnership, then you could. Does that mean that you can be an individual in a partnership? The partnership doesn't hold the ACCUs, so long as the individual holds the ACCUs, that qualifies? Is that what that means, Andrew?
Yeah, correct. Yes, spot on, Tanya. Thanks for clarifying that point. Yeah, so the individual is the ACCU holder, and benefits under a partnership in relation to the primary production business, which makes it a qualifying ACCU.
Probably a common structure, a little bit like trusts are a common structure for primary production business as a partnership. So if you had Joe and Betty partnership running a primary production business, the partnership doesn't hold the ACCUs, Joe holds 50% and Betty holds 50%. Is that correct?
In an ideal world, I think that's probably the best outcome from a tax perspective. But,
Thank you.
But it's probably important also just to flag that that may not tick other boxes, right? So whilst it might be the best tax outcome, it might have commercial or succession planning implications. I just want to sort of make that very clear that your individual person holding the ACCU does, only has that single taxing point when they cease to hold. But that's just got to be weighed up against the other implications for the individual, her or his his estate, etc., etc. Any other questions on the chat, Warden?
Tanya, just wanted to clarify on Tanya's question.
Yeah.
Tanya, a partnership cannot be a proponent. So if the land is held under a partnership, it will have to be one of the partners that is actually holding the annual account, and therefore that doesn't apply because it'll be an individual then.
Thanks for the clarification.
Thanks, Christoph.
I think that's it, unless Kim, you wanted to ask your question about the rolling balance for all proponents, whether a primary producer or not.
Yeah, just would like to understand what the rolling balance mechanism is actually intending to achieve. And I think I got that from what you said, but I'd just like to clarify.
Yeah.
And why it is important for individual primary producers to not have that applied to them.
Yeah, not a trouble, Kim. The rolling balance mechanism just it operates like a livestock or any other kind of trading stock account. So if you're holding stock, let's just go with trading stock, for example. A business that holds trading stock is taxed on the increase in value of its trading stock, or gets a tax deduction for the decline in value of its trading stock. Similar with livestock. Exactly the same with carbon credits, except they didn't put it into the trading stock provisions in the Tax Act. They put it through this thing called the rolling balance mechanism. But it's essentially saying if you hold ACCUs in your account and they go up in value, then you're going to get taxed on the increase in value.
But you also said that there was no definitive definition of
market value. Yeah, what market do you look to for the value? Yeah, that's an open question.
Yeah. Okay.
Now the reason for the individuals, when you read the amendment, the rationale which is put forward is that the government wanted to encourage carbon projects. They wanted to encourage landholders in Australia, like primary producers in Australia, to undertake carbon projects. But by virtue of the way that the definitions all sort of work together, you come up with this individuals only kind of outcome, which is counterintuitive. It's contrary to their intention. It should be if we're wanting to incentivize primary producers to do carbon projects, it should be agnostic as to the kind of primary producer. So it should be any kind of primary producer gets this kind of outcome, but it's not. So the way that the law has been enacted has this outcome. So hopefully that helps. Kim answers the question.
Does. Thank you, Andrew.
No troubles at all. All right, I'm conscious of time, so I might just forge ahead. That's all right. We can maybe come back and do a Q&A later on. There's a couple other matters around carbon farming. There's tax rules in Australia for carbon farming. If you really want to sort of unpack it, it goes back to Julia Gillard when there was this cap and trade mechanism, the emissions trading scheme, and carbon farming or carbon credits were really an industrial offset mechanism where an emitter would go onto the market, buy them, and then retire them. And so the tax rules are really drafted to work for the emitter's benefit. It goes onto the market, buys the credit, and retires it. You then come along and they introduce this carbon farming thing where landholders can produce the carbon credit. And then that sort of then spits out these weird anomalies at the end of the day, like things like insetting. So if you generate a carbon credit for the purposes of retiring it to offset your own emissions, do you get a tax deduction for any of the costs? Do you have some sort of income change? The laws don't work very well. Do you want to use something other than an ACCU? We're talking about ACCUs in this presentation, but just so that then people may already be aware, but there are other kind of carbon units around the globe. The Australian tax rules don't apply to them. Application of CGT rules, we talked about other offsets and credit schemes. There's some interesting questions about how you join together carbon credits and other kind of things like biodiversity. And then the whole state taxes mess, which I'm sure Matt can speak to, but at least in Queensland, and I dare say most of the other states, carbon projects fall afoul of the primary use of land for primary production, the main use of the land for primary production, if it's used for a carbon project. So that's a couple of other tax matters. Now, I'm really galloping through here, so sorry, I've spent way too much time talking about the tax stuff. All right. Accounting wise, there's two types of accounting concepts. There's the one type of accounting concept which applies where you have to prepare financial statements according to accounting standards. I dare say that that's not any of the people on the call today. If we are going back just to standard accounting principles, you can account for carbon credits the same way that you do your tax for carbon credits, which we've talked about. Also, you could choose to account for your carbon credits in a different way if it was meaningful for the users of the information that you produce the accounts for, right? So if it's more meaningful for the users of the accounts for you to account for the carbon credit in a different way to your tax return, then you can do that. It will make life complicated for you, but you can do it. What we generally see, though, is carbon credits held in an annual account once they're registered, treated as assets. Some clients will forecast what they expect to be registered, and they'll treat that as an asset as well on an accruals basis. That's fine from an accounting perspective. You just have to remember that you've got a different tax account. As I say, it can make life complicated. And income from the sales of carbon credits is generally speaking income in people's P&Ls and financial models and so forth. Got the comment there, carbon projects are increasingly well understood by banks and valuers. I think that continues to be the case. I think the understanding of the prospects of a carbon project are becoming more and more understood. And of course, the big mover and shaker in carbon reporting at the moment is the mandatory disclosure of financial reporting implications of climate change, and large emitters having to make requests of their supply chain for their carbon footprint. Now, this is a vexed question. No one can tell me just how far down or up the supply chain those large emitters or reporters actually have to look, and how they get any kind of assurance that what their supply chain participants are telling them is actually right. Certainly, if you talk to some of the more widespread industries like dairying, for example, apparently there's six or seven different ways to measure the carbon footprint of a dairy cow, and they all give wildly different outcomes. So which one do you produce? Which one do you tell your customer if you're a dairy? So things like that are kind of live issues at the moment. That's not financial implication, of course, or financial modeling. It's more of a commercial and carbon accounting model. But I just sort of mention it to sort of just highlight that it's something that I think the industry is grappling with, and in due course it'll become clear just how many people have to report carbon numbers, whether they like it or not. The other thing is, once you own carbon credits, what's the best way of marketing and selling them? Or should you actually, Wardy, please don't shoot me for this, but should you actually undertake a carbon project to generate carbon credits? Or should you just be using the carbon as part of your own on-property carbon accounting? So there's some questions there around carbon neutrality and how you best demonstrate that to the extent that you are seeking to market a product as carbon neutral. I'm more than happy to
shot
chat.
at all, Andrew. You won't be shot at all for those sort of questions. The question, I think, is whether you'd go to the extent of generating ACCUs compared to Vera or ISO or other types of gold standard credit
or whether you generate a credit at all. Or as I understand it, it's possible to have carbon accounting methods which take into account the carbon which would otherwise have been sequestered on property and use that within the carbon accounting equation for the enterprise. So you don't actually have to register or verify a credit.
Unaccredited versus credited program.
Correct. So there's a very big open question as to what's the value of that, or should you be accredited one way or another. That's beyond my pay grade at the moment, but it's a live conversation point, particularly around carbon neutrality on a product by product basis. I don't think we have time to talk about biodiversity, so I'll just skip these slides. If anyone's interested in them, more than happy to talk about them in the Q&A. Safe to say that biodiversity is complicated because there are multiple state-based schemes of biodiversity. There is a federal market which is being legislated but doesn't yet exist. It proposes to introduce a biodiversity certificate. And that biodiversity certificate is supposed to be taxed the same as ACCUs. That's supposed to be, doesn't exist yet. There's no law. There's no such thing as a biodiversity certificate that you can currently go and buy, as far as I'm aware. So this is all future. But in the state-based schemes, there exists hideous complexity around the tax implications, which I'd love to speak to you about if you've got time. About BDO, as I said, we do a fair bit of work in sustainability carbon accounting, decarbonisation and sustainability assurance. These are slides you can browse at your leisure, so I won't spend a whole bunch of time on them. We do have a bunch of webinars and things. To the extent that you are interested, please feel free to access them. They're all clickable links. And I think these go on and on. I think I would have held these down. That's about it.
Andrew, that's awesome. Thank you. There's a question that I'll come to at the end about the treatment of how we might work proponents in these three regions where they've come together as a group. But we'll let Matt take stage now, and we'll return to that question at the end.
Sounds good.
Matt?
Thanks, Wardy. How much time do I have? What's the timing?
Scheduled till 2, so maybe give it 30 minutes max.
Okay, let's see how we go. Lawyers love to talk.
Made in 6-minute increments. Of course you love to talk.
I think I walked into that one. Okay, so I'm a lawyer, and I got into the carbon space through a funny direction. I began doing pro bono work with the Malone Institute down at Bungendore, who Wardy knows well of. And basically what the Malone Institute does is it's all about rehydrating landscapes and kind of following up the Peter Andrews work with leaky weirs and all that type of thing. So I began doing pro bono work for them, and I'm actually now chairman of the Malone Institute. And through that, I began meeting a lot of landowners, not just in New South Wales, but around Australia. And they started to say, how do I do these carbon projects? Because there are some legal quirks. And so I began practicing this area about two or 3 years ago, and it's only growing at the moment. So that's how I ended up in this space. And there's not many. There's a couple of lawyers and law firms that have ended up working for the big global carbon developers, your green collars of this world and whatever. There's not a lot of lawyers that have a track record of acting for landowners, which is where I want to sit and play. Partly because it's difficult to find landowners. Like, where are you all? It's different media, different places, hard to market to, and for various reasons. But I'm sort of forging my own little path here. So I'm going to talk about carbon projects from a landowner perspective. So let me just, there we go, let's go. So I'm going to, sorry, I'll just get back to the start of my process. So the first thing I want to talk about, and And I'm worried that I'm going to be a bit too simple here, and you all know a lot about this, but I like to talk about the basics and build from there. So to establish a carbon project, and Wardy, can I just have your input here? How many people know this process, and should I go through it in?
I think most people will be familiar, so you don't need to spend a lot of time on these parts 1 to 6, but a recap can't hurt.
Yeah, okay. So I'll just do a high level recap. So basically, you've got a bit of land and you want to do a carbon project. The first thing you need to do is you make a decision with your carbon developer, who's the expert in the space. What's the methodology you're going to use? Soil carbon, vegetation methodologies, or whatever. And then you do a baseline survey of how much carbon you're sequestering, or how much carbon there is in your soil. But that baseline survey is where you start the carbon projects, and then the carbon that you either store or don't emit, that is what you're going to get your ACCUs on. And so an ACCU represents 1 tonne of carbon either not emitted or put into your soil. So that's what an ACCU represents. And so you do your baseline survey, and then you put your documents into the regulator, and you say, I want to do a carbon project, and they say tickety-boo. And then as you go down the track, you need to do audits to work out how much carbon you've sequestered in your soil and not emitted, and then you get ACCUs issued from the baseline above, and that's how you begin to build ACCUs. And those ACCUs are put into the project proponent's NREU account, which is what Andrew Jones was speaking about previously. And there's an audit process and various other bits and pieces. And once you've got that ACCU in this NREU account, it acts a bit like a share certificate, in that you can trade it, you can use it as security on loans. There's a whole bunch of things you can use it for. The quirk in the NREU market is that all your ACCUs have to stay in NREU accounts. So if I want to transfer ACCUs to Wardy has to set up an NREU account, and I've got my ACCUs in an NREU account. Then I transfer my ACCUs from my account to Wardy's accounts. That's how ACCUs move around Australia. They don't move overseas. They don't move outside of that environment. So it's a quirky structure, but I actually think it's working. It's had some criticism, but I think it's working. In terms of key statistics, there's 88,000 farms out there, and I think that only about 2 to 3% of land in Australia has a carbon project on it. So we're still at really early days. We're doing more and more soil carbon, because I think from the farms I talk to, the soil carbon method has a lot of agricultural productivity benefits as well. So if you don't get all the ACCU benefits you want, you're putting more carbon in your soils, which is helping you with your capacity on the land and the crops you're growing, or the pasture you're growing, or whatever. So it's got double benefits. About 20 million ACCUs are issued each year. And I won't spend a lot of time on those stats, but basically to say that it's still early days in this space, and I think there's going to be a lot more to come. And I'll give you my reasons soon. Here's the ACCU market, which is the price of ACCUs. You can see how they started at 20 bucks. They've gone almost up to 60 bucks, and they now seem to be floating between $30 and $40 at the moment. But the interesting thing is that a couple of years ago, as part of the safeguard mechanism, the Albanese government said to big polluters, you have to lower your emissions. And the big polluter says, well, okay, we'll go into this, but we're really worried that ACCUs will become enormously expensive. And then the government put a cap of $75 on the ACCU market. So for the time being, the price can't get above $75. But we'll see how it goes. It seems to be wobbling between 30 and 40 at the moment. There's a lot of discussion in the market about demand and supply and where that's going to sit, and that all comes down to pricing. But in my mind, it's only going in one direction. There's more and more demand coming through, and it's coming from ASX-listed companies that want to do the right thing. It's coming from the top 200 plus polluters that are going to have to buy ACCUs to offset their emissions. And that's required, that's mandatory, that's a safeguard mechanism process that was put in place before. And basically demand is growing, and I think it will really grow a lot in the next sort of 2 to 5 years. There's a lot of conjecture about will there be an ACCU supply shortfall. CBA said there was going to be a big shortfall. Some people think there's going to be a big shortfall. You know, there's other market participants who don't. But basically, you know, it strikes me that for a landholder, you want to measure the carbon on your land for a number of reasons. One of which is to be able to sell your produce down the track when buyers demand some data on your usage of carbon on your land. But separately, I think there's a chance that ACCUs will be very, very valuable going forward. So you could sell them profitably as well. The complicating factor in all this is that everyone's saying to landholders, we want you to do a carbon project. But then separately, you've got a lot of academics now, and Professor Richard Eklund is leading the charge on this, saying that farmers are actually going to need to keep their ACCUs so they can be carbon neutral farmers going forward, so that when Coles and Woolies knocks on the door and says, we're only going to buy beef from carbon neutral farmers, you've got the ACCUs there to be able to say, I'm a carbon neutral provider. We just don't know where this is heading, but we don't know how many ACCUs farmers will need to hold on to be able to sell their produce going forward. So this is all background to the advice that I've been giving landholders. So in terms of business model, I've seen 3 business models. One is fee for service, one is ACCU income stream, and the other one is a sharing of ACCUs between the developer and the landholder. So let me describe those models. And these models produce dramatically different contracts between the landholder and the carbon developers. So fee for service is a model that you all know, in that someone comes onto your land to do something, you pay them money, they do the project, and then they kind of leave the farm. So I've done some research in the market. I think there's about 30 carbon service providers out there, or there was about 2 years ago. And about 9, so about a third of them offer the fee for service model. Some do, some don't. And that's quite a big upfront cost for the landholder just to even establish the project. So you're looking at between $50,000 to $150,000, depending on the size of your property, depending on a whole bunch of things, just to set up the project before you then have to do the works to allow you to qualify for a carbon project. So there has to be some newness. You can't just do what you've been doing all the way along and be a carbon project. You've got to do something new. So it's got to be, you've got to put some leaky weirs in, you've got to do some plantings, you've got to put new fencing up, you've got to do something different. And so you've got to expect that after that 50 to 150K to set up the project, then you're going to have to spend some money to be new, to do something new on your land. But the good thing, so the bad thing about fee for service is it's money up front. The good thing is that you end up, the landholder holds all the ACCUs, 100% of the ACCUs. And then you've got a lot of freedom once that happens. The ACCU income stream is at the whole far other end of that legal structure, where the project developer gets all the ACCUs and they promise to give an income stream to the landholder. This is becoming less and less common. This was around at the start of carbon projects, but I wouldn't be surprised if there's still some out there. And the problem for landholders there is that if you don't have any control, you don't have your own ACCUs, it's very difficult to audit, the carbon service provider, how much they're selling it for, are they selling it for a market price, or are they selling it just to their mate down the road at a low price, and then they're on selling it, and they're getting it becomes very difficult to track the price of ACCUs going forward. But you could potentially do that from a contractual point of view, but it's difficult. And the third model is a combined cash and ACCU model, which I think is about 70 or 80% of the market at the moment, but that's just my gut feel, where the developer and the landholder share ACCUs, and it can be anywhere from 5% to 30%. I've seen even worse. I've seen the landholder giving up 50% of ACCUs, but that'll be a negotiation between the landholder and the carbon developer about who pays the cost for setting up the project, how many ACCUs you think you're going to get, and you need to be quite savvy where you land on how much ACCUs you're giving away to start the project. So those are the three different business models. The key issues in carbon projects, and we've touched on it in the previous seminar, so the government sets up the carbon project, and they'll say to the project developers, we need to have a person that we contract with, and that person is the project proponent. And the reason being is that if something goes wrong, the government needs to sue someone or needs to have a legal obligations against a person. So that project proponent can be the landowner, it can be a landowner subsidiary company, it can be the project proponent, it can almost be anyone, but that person needs to be able to enforce the obligations of the government onto the landholder. So they've got to have some legal relationship with the landholder. So if something goes wrong and the government says you need to reinstitute that fence line, you need to redo paintings, whatever, the project proponent has to have the legal ability to force the landowner to do it. So that's how the legal structure works. And I think the easiest way to think about it is in a contractual sense. How does the government force the landowner to do things to make sure they're still compliant with what the landholder has promised to do? So that's why there's a decision at the start of the project whether the landholder is going to be the project proponent or the carbon developer or someone else. And Andrew, I don't know whether you've given any advice on this, but quite a few tax agents are talking deeply with farmers about maybe you set up a standalone company within your landholding structure to own this and be the project proponent. In case anything goes wrong, you can potentially put that entity into insolvency. But that's a discussion for another day. Then you get the issue of who owns the ACCUs. Now the government will just put the ACCUs into the project proponent's annual review account, and then how they're distributed is to do with the arrangements between the carbon developer and the landholder. So if the carbon developer is the project proponent, yet they've done a 25-75% split on the ACCUs go into the carbon developer's annual review account, and then they have to send 75% to the landholder's annual review accounts. That's the way it works in that way. But it's an issue of government regulation is where the ACCUs go to, but then it's your contract with the developer as to where those ACCUs end up, in what buckets they end up in. It's important as if the landholder owns 100% of the ACCUs, they can then cancel a carbon project quite easily by just handing those ACCUs back to the government and cancelling the project. So if you end up, and this will come to my advice a bit further on, but if you if you give away 25–30% of your ACCUs, or you sell that amount down the track, and you want to cancel the project at a later date, you're going to have to go into the marketplace and buy that equivalent amount of ACCUs, so that if you want to cancel the project, you can return the same amount of ACCUs back to the government. I'm just worried I'm losing people here, but I'm getting some nodding from Morty.
You're good. You're good. Keep going.
Okay, I'll keep battling on. The timing and commencement of carbon project is something that is interesting, because, you know, when you do your baseline study, it's a pretty important time, especially if you're doing a soil carbon project. If you've had a wet season and your soil is lovely and hydrated, there'll be a lot of carbon in your soil. But if you've come off a couple of dry seasons, there won't be a lot of carbon in the soil. So you might decide to do your baseline for your carbon project after a couple of dry seasons. So you should speak to your carbon developers about that, but it's worth thinking about. Now that won't matter if you're not doing soil carbon, if you're doing some other methodology, but you need to think about when you conduct that baseline survey, so you get the most upside, I think. There's a conflict at the heart of these projects that landholders have to be aware of. The moment you go into a carbon project, you're potentially introducing other parties that have a right to how you manage your land. So if you think about it, when ACCUs are issued, the government suddenly has what's called a permanence obligation over the land. And what that means is that so you set up a carbon project, and ACCUs aren't issued straight away. They're issued 3 years down the track, or 5 years down the track, or whenever they are issued. But the moment they're issued, the government then says, okay, I've issued you some ACCUs, therefore you need to manage your land in accordance with your land management plan for the period of time that those ACCUs are live. And that can be either 25 years or 100 years. So that's what's called the permanence obligation. And that obligation runs with the land. So, you know, if you're selling the land to a new party, that obligation goes to the new landholder, like a caveat on the land, or like some sort of structure that's on the land that moves, you know, when you sell the land. So that's one party that now has an interest in how you run your land. Another party that has an interest in how your land is a carbon service provider. Now, if you think about it, you go into a partnership with someone, and they want you to run your land in such a way that you will develop as many ACCUs as possible, because they're getting 25% of the ACCUs, or they're getting how many of the ACCUs. So you need to have a look at that contract and work out how they enforce those rights. Now, I've seen some contracts that say that the landholder cannot change how they manage their land without getting the approval of the carbon service provider. That's something that I think landholders should have a think about, because you're putting in place a 25-year commitment, especially if you're thinking of moving from, you know, a grazing operation to a cropping operation. You know, you probably won't be able to do that, or you'll be in breach of contract if you were to do that under this area. So you just need to be careful that you've got a relatively good idea about how you're going to manage your land for the period of time. Otherwise, you'll be in conflict with the carbon developer. And then you've got the obligations to the regulator. When you set up your carbon project, you've got an obligation to the regulator to act in accordance with your land management strategy or your land management plan that you give to them. So you make a commitment to the government to say, I'm going to manage my land along these lines for the next 25 years. Now, we haven't really seen how that gets litigated. We don't really know what happens when that goes wrong. But you can imagine a scenario where someone just says, look, I don't want to do this anymore, and changes how they manage their land in a major way. And then the government says, hang on, I issued you with ACCUs on the basis that you promised to manage the land in a certain way, and now you're not doing it. There's going to be some regulatory issues there, but we haven't got to that yet. I haven't seen how that will play out in real time. So basically all I wanted to say is, from a legal perspective, when you set up a carbon project, you're introducing 3 other parties that might have an interest in how you run your land. So you just need to manage that accordingly. The other big legal issue you have is when you sell your land, the carbon developer will want to make sure the contract is between the landholder, typically between the landholder and the carbon project developer. So when you sell the land to a new landholder, there's no contractual relationship between the carbon project developer and the landholder, because their contractual relationship was with the last landholder. So this is why in these agreements you'll see a clause saying that as the landholder, you can't sell that land to a third party until you novate, until they agree to novate the carbon project agreement to the new landholder. So there's a restriction on the, on how you sell your land, which is also a little bit scary for landholders down the track. So this is why I say, look, it's really important that you think carefully about the project that you're going to have on your land. Because if you sign a bad carbon project agreement, it might, someone in the future might say, look, I want to buy your land, but I don't want to take on that crappy contract that you've got. And so you've got to get rid of that crappy contract before I buy your land. And then the landholder goes to the carbon developer and says, I'd quite like to get rid of this crappy contractor. And the carbon developer says, well, tough shit. pardon my French. You're in the middle of a conflict there. And I've already given some legal advice on this issue, where someone bought a piece of land with a bad carbon project on it, where all the benefit was going to the carbon developer and not much was sitting with the landholder. And they said, oh, look, I just bought this land and signed the novation of this agreement. But 6 months later, I'm now looking at this agreement and it's a crappy agreement. How do I get out of it? And I said, well, it's too late. You should have negotiated this when you bought the land. It's very hard to get out of these contracts from a legal perspective. So they're kind of stuck with, a long-term bad contract, basically, in that scenario. And this was a $300 million Queensland family office that owned $300 million worth of agricultural land. And they, for whatever reason, decided not to get a little bit of legal advice when they bought the land. And it's come back to bite them in a big way down the track. So here's another thing you might find in your agreements. A carbon developer will say, I'll get 25% of your ACCUs, but they'll also try and sneak a clause in down the track saying, and when you sell those ACCUs, sell your 75% of the ACCUs, when you sell those ACCUs, you have to sell them through us. We're your exclusive sales agent. I don't like those clauses. I strip them out straight away, because I think that someone might be a good carbon developer. They might be good soil scientists. They might know how to do this well. But who knows if they're a good commodity salesman down the track. So you don't want to be stuck having to sell your asset, your carbon, your ACCUs through this person down the track. But for them, of course, it's very lucrative if they can control that, if they can get their percentage of the sale down the track, or they can control who it's sold to or when it's being sold. So just be really careful about this. These contracts, the big carbon developers, they've had the best law firms in Australia draft their contracts, and they're drafted in such a way that it protects and provides as much value to the carbon developers as possible. So even though some of these carbon developers are called green warriors or lovely people, or we're lovely carbon people, when you have a look at their contracts, there's some really nasties in those contracts. So I really think it pays to get some legal advice before you sign these contracts, because you're stepping into a 25-year commitment. you're stepping into a commitment as to how you manage your land, and you're stepping into a commitment of when and how you can sell your ACCUs. So they're all pretty scary places that you're heading into. And if you just signed a contract without reading it, you're in big trouble. But we have seen that happen.
Matt, got a question from the floor, if that's all right.
Yeah, go for it. Do you want to tell me the questions, Wardy?
Christoph, I'll let you go, and then
Quick one, Matthew, thank you. I do agree that you've got to read the contract very carefully, but on the other hand, there are CSPs that are okay. I mean, if you read the agri-proof contract, it's not bad. Not that it would, necessarily advise in every case that you go with a CSP, quite the opposite, but then some of them are really bad, some of them are not. But one quick question. You mentioned the permanence obligation on the land, but I thought the permanence obligation was on the project proponent and not attached to the land.
No, it's attached. It's attached to the land, and there's actually a bit of a legal issue here in that it's a federal obligation that's attached to the land. But if you go to the Land Titles Office, only Queensland is mandating that when the permanence obligation happens, it's listed on the Land Titles Office in Queensland. So if you're buying a property,
but it's not.
Well, it's meant to be. Sorry. Yeah.
No, the permanence obligation is not listed on the title. It's only if you have a permanent, I can't remember, it's still a maintenance obligation on the land, which only occurs if you have a relinquishment requirement that you do not fulfill. But on a normal project, there is nothing on the title.
Is that, are you talking about a certain state, or are you talking about across Australia?
Queensland, definitely not.
Right, okay. I'll have to have a look at that, Christoph. I'll have to have a look at that. I was under the impression that it's only the Queensland Land Titles Office where you register it as a caveat on title.
No,
whereas in New South Wales and elsewhere, it's not on title, and you need to go to the. So what happens is the Clean Energy Regulator has a public register, and on that public register, you can look at which bits of land has a carbon project on it. But
yes,
there's a disconnect between the federal government register and the local land titles registers, and they're not
the federal register, which is a CER register, is just something for information. It has absolutely zero legal value.
Yeah. But I'll have a look at that issue, Christoph.
5-minute warning, Matt, go for
it. So my recommendations for landholders, and I've talked about this, get independent legal advice. I mean, I'm talking my own book, but I think it's worth it. I think there's a way you could flip the script here as a landholder and not be a price taker, but be a bit of a price maker. In that, as a landholder, you've got a valuable asset, which is the land. There are quite a few carbon developers out there. I don't see why landholders aren't testing the market a little bit more, and using this process as a bit of and I call it an RFP process. But that's how governments source, winning contracts. So I would like to see landholders more and more put out tenders saying, I'm thinking of doing a carbon project, and then putting it out to 5 or 10 carbon developers and saying, what's your offer to be my carbon developer? And then doing it that way, because that's how, as a landholder, you get a lot of leverage and a lot of power if you have multiple carbon developers bidding for the right to do the carbon project on your land. So I've done that once, and I've developed some precedents for that process, but I haven't seen that being taken up much by farmers. But maybe the larger commercial farmers will begin to do this. But the larger commercial farmers are actually taking a lot of their skills in-house. So they're doing the carbon developing themselves. But anyway, so you don't have to sit there and just accept the contract that's given to you. You can negotiate it. You can do a normal commercial process for how you do this. If you have finances available, I think you should consider a fee-for-service model. And the reason why I think you should consider that is that I think you should try and hold on to your ACCUs for as long as possible so you can see how the inset offset debate develops. You can see how many ACCUs you're going to need to keep as a landholder so that you can be carbon neutral in the future. And it's only probably in 5 or 10 years that you'll be able to work out, well, what's my surplus? What ACCUs do I not need? And it's only then can you sell them. But if you've already given away a percentage of your ACCUs up front, you don't really know what's happening. Now, the downside of doing that is you have to pay for carbon project up front, and that's risky because you don't know what benefits you'll get down the track. But fee for service is something that I think you should think about. When you're and I think you should negotiate your carbon project agreements to minimise the land management issues that I've talked about and minimise the sale restrictions issues that you've talked about. So there's ways of doing that from a contractual point of view. You should always be anticipating a future sale. The other thing you should anticipate is that your carbon service provider is going to go out of business, or they're going to sell their rights under that contract to a third party. So you might like working with Wardy and Regen Farmers as your carbon developer or whoever you have, but you've got to know whether or not they can, in 5 years' time, they can flip that to someone else without your approval. So you need to have a think about whether you want to have that right. And I would have thought you do. You want to have some sort of right as to who's going to be your partner going forward. But that's hardly ever negotiated or picked up in contracts. And I also think that you should consider separate contracts for separate tasks. So you have a contract with a carbon service provider to set up your project, but you might have a contract with a separate commodities trader to sell your ACCUs down the track. I don't see how the two should be combined into one agreement. So I think anticipate that these ACCUs could be very valuable in the future, and try and make sure you've got as much freedom as possible if you want to sell them at as high a price as possible whenever you want to sell them. But often those things are restricted in your dealings with carbon developers. So I think those are my recommendations. But
Thanks, Matt.
Yeah, and just one last thing. Asset valuation is just a big issue at the moment. Land valuers are really struggling to work out how to value these projects, because to value these projects properly, you've got to dive into the minutiae of the legal agreements between the parties. And property valuers are not good at doing that and don't want to do that. So there's going to be an issue going forward because I would argue that a bit of land with a carbon project, the carbon project can either make your land more valuable if it's a good project, but it can make your land less valuable if it's a bad project. So that's an issue going forward. Sorry, over to you, Wardy.
No, perfect, Matt. Look, thank you. We've come up against the time, but I invite yourself and Andrew to stick around for a couple more minutes as we answer some of these questions that have come in on the chat. Matt, you talked to about 300 of the 2,000 odd farm projects have been revoked. What was do you know much about those revokings, and was that were there litigation instances there that the farmers here could learn from?
There's been very, very little regulatory action very, very little litigation on it. So I don't know, and this comes from this screen back here, which I'll get to. There's been about 250 projects. Here we go, 300 projects that have been revoked. I can only think that these are persons that began setting up a project and then suddenly wanted to sell the land without a project, or they wanted to do something different on their land. And before the ACCUs are issued, and remember there's a period of time between when you set up the carbon project with the government, normally it's 2, 3, 5 years before the first ACCUs are issued. You can actually cancel the project easily before the first ACCU is issued. So I just think it's landholders that maybe started a project and then just for whatever reason decided not to go ahead with it.
Excellent.
Yeah, well, I've revoked myself about maybe 30% of the projects I've ever been involved, exactly for the reason that Matthew mentioned, you know, change of heart, or even sometimes it's just admin reasons. You have to change the proponent, and it's simpler to just cancel the project and start again.
Excellent. And I think I'm going to ask a question to summarize some of Wendy's. Is the best idea to get registered and then assess whether you want to do it with a proponent or negotiate the bits and pieces? I don't imagine you can do this is the bid for my farm's carbon project unless it's a registered project. Or would you like to talk to that?
So that's, are you saying when should you set up your legal structures for owning the project, before or after registration?
Yeah, potentially that's the question. That's a better way of framing it.
There is a mechanism of transferring who the project proponent is from A to B, but I've actually never seen it happen, and I've never been involved in doing it, so I don't know how easy or hard it is. I think the government would just need to get some comfort that the new project proponent is happy to take on all the obligations of the old project proponent and has the ability to enforce the rights against the landholder. So once you've crossed those two hurdles, I don't see why the government would object to a changing of project proponents. So I think you could change it reasonably easily after you set it up, but I just haven't seen it being done. It's quite a simple question, I think. So while you're going through the process of setting up the project, it's really just a or B. You know, do I want to be the project proponent or not? You know, a lot of carbon developers were saying, look, it's better off if I'm the carbon proponent and not you as a landholder, because if there's any regulatory litigation issues, I'll be the one taking the hit from the government, not you. But in reality, I think that's a bit of a furphy of an argument, because in the contract between the project developer and the landholder, they'll have all the rights to enforce any actions anyway. So, you know, I'm a bit of a first principles kind of guy, and I think as much as possible, you know, it's better off as a landholder, if they're your assets, have them registered in your name. So you've got more flexibility and power going forward. The way it works as a landholder is you register it in your name as project proponent, and then you appoint the carbon developer as your agent, and then they can do everything that they need to do with the government as your agent. But your name is on the NREA account, so the ACCUs are issued to you. So if there's any dispute in the future between yourself and the carbon developer, the ACCUs are in your account. You're not suing them to move the ACCUs from their account to your account if there's a disagreement. You know, possession is 9/10 of the law. There's a bit of that. So I get more comfortable if I'm acting for the landholder if they're the project proponent.
Excellent. Christoph, you've got a question, and Andrew Jones, any questions from you, having had a listen?
Just a super quick one on what you said, Wari. It is a good thing to register the project yourself and then turn it over to a CSP if you so desire, and after you've crossed the T's and dotted the I's. It's a good idea. It doesn't cost anything, or it costs very little to actually register the project. There's no CER fees, for example. And with that CER readiness, you can do it at absolutely no cost, and then you're in the driving seat. Changing the proponent I've done it many times. It's actually very easy. It's a super simple variation. As long as the new proponent signs a variation, the government transfers it immediately. They ask no questions. So it's really a 5-minute job.
Yeah.
Thanks, Christoph. Andrew Jones, any questions or comments having heard the legals?
Thanks, Woody. Yeah, I think Matt's probably made a very good point in terms of the entity that you choose to carry on a carbon project. We talked in my session about the individual primary producer benefits. They need to really, really be considered carefully, though, because when you come down to the commercials and a lot of other kind of factors that play into that, a special purpose company to conduct a carbon project may well offset all of the tax implications that an individual might otherwise enjoy. And bear in mind, too, when it comes to individuals and primary production businesses and tax losses and so forth, always bear in mind that there is a hard ceiling of income for individuals being able to utilize losses of $250,000 of income, which, depending on your point of view as to the value of a carbon credit, you may or may not get to you may get $250,000 of income relatively quickly. So yeah, I probably just want to chime in on that and say, yeah, very good point that Matt's raised. And I think the only other thing to the point around the valuers, yeah, certainly interesting observation. I think the valuers are a little reluctant to wade into the legals to understand the detail of those agreements. But at least they're not just a blanket devaluation kind of proposition. Certainly, in my experience, there's a more nuanced conversation emerging with valuers in general, but definitely in terms of property diligence, due diligence, which is being undertaken, carbon is increasingly valued by purchasers and really getting an understanding as to whether the project is a good deal or not.
Thank you, Andrew. Wendy and Tanya, you've had a few questions. Tanya, your question about the carbon rights agreement, are these the same as what?
That was just when Matt was talking about legal agreements between either your CSP and your landholder or your, or who you might sell through. Previously, I thought the similar thing was called the carbon rights agreement, but I wasn't sure if it was the same.
Yeah, unfortunately, there's been 5 or 6 different terminologies for these agreements. So there's no real precedent as to what they're called. But basically, when I talk about a carbon project agreement, I'm talking about an agreement between a CSP and the landholder. And the separate agreement for selling your ACCUs down the track, would just be a sort of commodity style agreement. I've heard them called carbon rights agreements. I've heard them called, there's just a million different names for it. It's a bit annoying. The Carbon Markets Institute did a precedent agreement in this space, which was CSP friendly, but not too bad. But the majority of CSPs just completely ignored it, and they're off on their own contracts. So every CSP tends to have different contracts, which is annoying for the landholder. But that's what we are.
Thank you. And Wendy, how long will the $75 cap be set on the ACCU unit value? How's this able to be enforced in an open trade market? I'll leave that for the accountant. Andrew?
I'm unable to give financial advice, Wardy. I think that the $75 cap is a de facto cap, right? Because that's the price ceiling that the federal government said that they'll transact in the market for. That $75, I think, will be seen by the emitters. It's anyone's guess as to whether the market actually trades above that, and the government wears the price risk. I'm not sure, Wendy, whether there is an answer. Certainly, many people have conjectured on that exact point. So yeah.
it's much higher overseas. In Europe, I think we're at like $120 or something. So already the cap is too low. But yeah.
All right. Just noting we're going over time a bit, so I might ask Matt to stop screen sharing, if you will. We'll sign out. Andrew and Matt, thank you so much for your time, generously given. Everybody on the call, I'll be putting out the 3 sets of slides as PDFs from Matt, Andrew, and myself, so that you've got them for reference. And probably until later tonight, when I'm back on some internet that's not my phone, I'll publish the recording and distribute that to people who registered. One big massive thank you to Matt and Andrew for your inputs. Really appreciate it. Thank you very much.
Thank you.
Thanks, everyone.